Hello, this is Ahura from Altet Markets with global economic outlook in the week ahead, which is going to be the 28th week of 2024. As always, let's first check the data we had in the previous week and see what we can expect in the week ahead. Last week, the main focus of the markets were on PMI numbers and US labor market data. On the PMI front, most published data from UK, United States, and Europe, they were missing the expectations, or even if they were better than expectations, such as the data that we had in the Eurozone, they were less than previous month. Let's start from the Asia. In China and Japan, the data they were better than expected somehow, especially the stocks and data from China. They confirmed somehow that after several weakness months that we had at the beginning of the year, now the economy is getting a little bit better in China, and maybe we can have more rooms to grow in the next months. In UK, in Japan, the Tonkin big manufacturing and non-large manufacturers, and both of them, they were better than expected, and they were growing from the previous months. Somehow, maybe they can say that they can show that okay, the Bank of Japan will have opportunity and will have the possibility to increase their rates, but still the numbers they were not that opposite that optimistic that it was expected. So probably the Bank of Japan will need more time to start increasing the rates. Probably we may expect the BOJ to increase the rates from October. In Europe, as expected, as explained, the PMI numbers, they were better than estimates in most Eurozone economies, but still they were lower than previous months and under the 50 expansion levels, which means that the Europe economy is still weak and they have more challenges to go forward. Same opportunities, same condition we had in the UK as well. In the United States, the numbers not just they were less than expectations, they were less than previous months, they were under the 50 expansion level, which means that the economy in here, when we are talking about the fundamental weakness in the US economy, that's one of these reasons. We saw that the ADA numbers also, they were leading index number also lower under the zero level, under the zero in negative area for very long time. So these data overall, they show that the GDP numbers also, the GDP growth also, it was weaker than previous quarters and as well as the previous expectations. All these numbers, they say us that the US economy is getting weaker. Now they have a sign of the weakness, which means that actually it's not something, it's not a surprise, as the central bank increased the rates to lower the GDP growth. So which means that the cooling down the economy, they were trying to control the inflation, which is somehow happened. We saw that inflation is falling down. So at the same time, we should see the economic growth also slowing. So it was not a surprise, but still on the labor market on Tuesday, we had the GLT job openings. We know that the GLTs have been falling from above 11 millions to under 8 millions, but still again, it's increased above 8 millions to 8,130,000 GLT open jobs, the open jobs that they were not filled in May. But still, we can say that for each unemployed American right now, we have 1.2 job. Do not forget that it was more than two, it was about two just less than a year ago. So the labor market also is getting weaker, and these numbers, these data says that we should expect a little bit more weaker economy and labor market in the next months as well. If we go forward and look at the Friday's NFP numbers, you can see that despite 206,000 newly created job in June, it is still lower and less than previous month, while the previous month's number also revised lower to 218,000, which it was much more than 218,000. I don't remember exactly what was the number, but still, let's check. Let's check what was the previous number, but it revised down to 218. Yes, it was 270. Look, it was 272,000, and from 272,000 released down to 218,000, which is very pessimistic, and that happened more that created more negative effect and negative sense in the labor market. Don't forget that the labor unemployment rate also increased to 4.1% from 4% that we had in May. At the same time, the average earnings also didn't increase much higher, and they increased just 0.3%. That was as market was expecting. So lower, weaker labor market with the weaker earnings. So it means that the Federal Reserve will have more rooms to cut the rates, as we see in the CME Group FedWatch tools. Now we have more than 72% a possibility to cut the rates by Federal Reserve in its September meeting. But still, with these numbers, we still have a doubt on the second rate cut, which is possible, which if it's possible or not, we have a myriad doubts about that. For the week ahead, most focus will be on inflation numbers, which we are expecting to see from most developed and developing economies, including China, some Eurozone economy, and United States. In China, we expect the inflation to increase again above what the market is expecting 0%, but I expect 0.1% inflation for June, which means in an annual scale we'll have the 0.5% inflation, or 0.4 or 0.5% inflation, which is going to be a little bit positive news for the Chinese economy. On Wednesday, we have a central bank meeting in New Zealand. We are expecting RBNZ to hold the rate at 5.50% as the inflation worries that they had in the previous month, as well as labor market is still strong in the New Zealand. So the central bank still has a room, has a time to hold the rates higher to control the inflation before start cutting the rates. We'll talk about the energy market later, but in the UK, we will have the GDP numbers. GDP on the monthly scale, and nominal GDP is expected to increase by 0.2%, but if we go to real GDP, it's going to be lower, less than it's going to be negative, but still the annual, we are checking in the market, was watching the nominal GDP, which is expected to increase by 0.2%. After a little bit better grow in the first quarter, we don't expect the second quarter also to increase 0.7% as it was in the first quarter. Probably the second quarter GDP can be around 0.4%, not 0.7% that we had at the first quarter. On the inflation front, in Germany, we expect the inflation to increase by 0.1%, which means annual CPI, sorry, the inflation, the CPI, annual CPI to stay to remain unchanged at 2.2% with the 0.1% monthly growth in June. Then we will have the CPI numbers in the United States. In the United States, CPI is expected to increase by 0.1%, and the core CPI also, I do think that it can increase also by 0.1% both, but core CPI will, in the annual scale, will increase to 3.5%. It's expected to increase, to see this 3.4% to increase to 3.5%, but the headline CPI supposed to fall to 3.1%. And the main reason for core CPI to like we will say the core CPI to increase again is the food prices. For headline price to not fall so far is the food prices, and because the food prices was falling, but at the same time we can see that the core CPI is excluding the food and energy prices, but the general CPI, which we have the food and energy prices, it cannot fall too much because the food prices also was increasing. At the same time, the energy price also in the last month increased. So we do not expect inflation to fall under 3% for now. So 3.1%, 3.2% is much better number that we can save and we can expect. On the core CPI, 3.5%. The main reason will be the house prices. The house prices will lead this, probably will have the core CPI to increase to 3.5% in June. But beside the inflation numbers in the week ahead, the focus will be on the Tuesday and Wednesday testimonies. The Federal Reserve Chair Powell will testify against Congress before Congress to explain the Federal Reserve policies and the Fed decisions that they had and what's going on in the inflation on the inflation front, and as well as the economic growth that the central bank is expected to see for the United States. That's the main and most important data we had on Saturday. We'll have the Chinese trade data. We know the Chinese import increased by 8% in May, then full increase in April, and then lower increase we had in May, and now in June also we are expected to see 1.8%, around 2% increase, 2% increase in imports. But this export will increase, will have more than 7 or 8%, around between 7 and 8%, which means that the Chinese economy, as I told, is expecting to grow further. But still, for the next months, as the inflation is increasing, in our inflation affects the long higher inflation for longer effects now shows itself on the US and European economies. Most probably, and we saw that the ZEW economic sentiment, IFO economic sentiment in Europe, and CB consumer confidence in the United States, they were all falling down. So which means that the consumers, they're going to spend less money. So Chinese export also will slow down. That's overall data and expectation. Let's go to the chart and see what we have as what we have in the chart and what we can expect in the charts. This is the chart. This is the chart of the gold price. The geopolitical tensions is there. Weaker US dollar, lower yields, all of them, they're supporting the gold price. So at the same time, we saw that from the technical point of view, it couldn't bridge down the 38.2% of Fibonacci level. Still, it's a very strong support here. We have at $2,274, which means for now, still the gold is bullish and can go forward with the next target at 2,450. On the US dollar front, US dollar weaker a little bit after the weaker PMI numbers and weaker labor market data, which both of them, they support the rate cut in September, which is the negative news for US dollar. But still, we have too many other reasons that they will support the US dollar, especially if the inflation numbers this week become more than expectations and showed a little bit increase in inflation. Then that also will have other reasons to slow down the bears movement. And for now, we will have the US dollar index around 104.70 mark, a little bit lower than this, but we'll have around this number. On the energy front, WTI increased a little bit last week, and still we are expecting to see higher numbers for the week ahead. As you saw, the API and EIA numbers, both of them, they confirmed that the lower and less inventories in the United States as the seasonal travels in the United States started. They start using the roads, cars, and airlines as well, which all of them, they need oil and they need energy, and they support the energy price. In one time, in another time, the geopolitical tensions in geopolitical tensions that we have in the Middle East, still they are also supporting the oil price. So see that from the technical point of view, also we are again above $82. We are in a real and a clear uptrend, and the price can go forward. If we can if we can go above $85, then $89 will be the next target for the oil. On the stock markets front, S&P 500 and other Dow Jones and Nasdaq, all of them, they printed the new records last week as the market was expecting more. The market now, they put more opportunity, they give more opportunity for rate cut in September, which means the dovish policies for Federal Reserve, and that support the stock market's uptrend. But still, that cannot go forward too much, as we can say that these numbers, these reasons are the negative reasons that they're supporting the stock markets. So probably we will see from these levels, probably we'll see some correction. From the fundamental point of view, I don't see any reason to go forward above these levels. But from the technical point of view, you see OBV shows that lower high after that we saw after higher high in the chart. OBV shows lower high. On the RSI also, we saw the RSI on the overbought area, which means that in next week probably we'll see a little bit correction. On the cryptocurrency front, we saw that there were different several factors. They were supporting the downward in the cryptocurrency chart. We saw that the selling in the U.S. government, selling in the U.S. in German's governments, and several problems and several hacks and stuff and other stuff that we had, errors, mistakes and problems that we had on the exchange front. All of them, they support the fears, sentiment in the market, and probably more people. As also there is a cycle of the after the printing a new records, there's a cycle of the correction. So probably these corrections season plus the negative news that we had, probably all of them, they can support the current downturn that started, especially if the price stay stable under 57,000 US dollar, then we can put the 57, sorry, if we stay on stable under 57,000 US dollar, then we can put the 51 or 52,000 US dollar as the next target, and under that 47,000 US dollar as the second target for the next weeks. This is the overall market condition and the expectations. If you have any other question, please don't forget to write down under this video. I will try to get back to you as soon as possible. Have a good